Yesterday, the New York Times broke after reviewing 20 years of Trump's tax returns that he only paid $750 in taxes in 2016 and 2017. That's outrageous. It should have been zero. Watch this video to find out why.
Makes my blood boil. Everything he does makes my blood boil, and what's going to make my blood boil even more is if there are no consequences.
I mean, it's just kind of insane. Being this young, I feel like I pay more taxes than the president has, and he's supposed to be setting the example for everyone. And when you look at what's going on in this country, I mean, even with the Pentagon's funding, how they took $1 billion from the PPE, it just kind of shows like how much he cares about the American people.
Outside Trump Tower in New York, there was outrage. Ordinary Americans learning they pay more tax than the president. Michael came to protest after losing his job in the pandemic.
It's tough. You have to think about what you're going to eat. It's that scary. It's a nightmare. It's an actual nightmare. Plus, I paid more in taxes in 1 year than he paid in 10 years. And he's a billionaire. There's something wrong.
As an investor, it's really important that you maximize the return on your investment. Now, there's a few different ways you can actually get your returns on those investment properties. The first one's appreciation. That's really simple. You buy the property and over time it appreciates in value. All right, not complicated. The second one is actually cash flow. You take your monthly principal, interest, tax, insurance, utilities, whatever, right? All your expenses and whatever your rent is, and that's your monthly cash flow, right? That's, again, not really complicated. Where people get kind of lost is depreciation. And that's where Trump was able to offset all of his income, okay? So depreciation, that's 26 US Code 167. Check it out. And what it is that the government tells you that your property is going to fall apart over the next 27 and a half years. Now that's 27 and a half for residential, so single family and multifamily. But for non-residential, like commercial, then we're looking at 39 years. So what happens? Let's just say you've got a home, a property, right? And you bought it for simple numbers, right? Depends on where you are in the country, but for simple numbers, it's $100,000, right? So you bought a rental property for $100,000, okay? Now, the loan here doesn't matter. None of the expenses matter. We're talking about just the physical asset when we're talking about depreciation. Now with depreciation, you can only depreciate the physical asset, not the land. Depending on your accountant, they can be as aggressive or less aggressive. So you can only depreciate the percentage of the value based off the physical property. So for us, again, simple numbers, we'll say it's 80%. We're gonna make the argument that 80% of the property is the physical building and 20% of the value is the land. So we can depreciate 80% of the property. 80% of the property gives you $80,000, right? So we're saying that the physical asset's $80,000 and we can depreciate this $80,000 over 27 and a half years. I know the half is kind of weird. So we take the 80K and we divide it by 27.5 years. That means that every year you can depreciate about $3,000. Now I know the math isn't exact. I recognize that it's less than $3,000, but we're just gonna use for simple numbers, $3,000. Now you take that number, okay? That's for $100,000 in assets. So if you got $200,000 in assets, we're talking about $6,000 a year. So let's just say you got 10 of these properties at $100,000. That means you have $1 million in assets. That means that every year, year in, year out, for the next 28 years, you get to remove $30,000 from your taxable income. And it doesn't matter, you know, let's just say you make $100,000 a year, okay? And you've got your standard itemized deductions, so on, so yours only like 70, something along those lines. Well, whatever that final number is, you get to remove an extra $30,000. So your taxable income goes from 70 to 40. Okay? So this is if you got $1 million worth of properties. What happens if you own 10 million? That means you get to reduce your taxable income by $300,000. Okay? A lot of money. At least that's a lot of money for me. Okay? Now, let's say you have 100 million, which I don't think is a bold claim for someone like Trump, right? So if he has $100 million worth of physical assets of buildings and so on, that means he gets to write off $3 million year in, year out for 27 and a half years or whatever from his taxable income, right? So these are all rough round numbers. I don't know how much he actually owns. I imagine Trump Tower is at least $10 million, okay? And so if you're looking at this, he's removing his taxable income by $3 million every year. So when they said that he pays $750 in taxes, I don't even know what it's from, because I don't think he's making more than $3 million, or maybe he is making more than $3 million a year. But whatever it is, he can always increase the number of assets that he owns to remove his taxable income. So you can't get upset that he pays zero in taxes, right? And that's fine. You know, if you're making 30, 40,000 a year and you're paying more taxes than Trump and you're offended, that's fine. But here's the thing, you can't get upset about it, or you can do something about it. And what you can do is you can be a savvy investor, you can start buying rental properties, and you can reduce your taxable income. So by the end of, you know, if you were to buy just one property a year, you can reduce your taxable income by $3,000, $6,000, $9,000, $12,000, and so on. And this doesn't even get into advanced cost segregation, doesn't even get into 1031 exchanges to further reduce your taxable income. So guys, there's lots of ways to reduce your tax liability legally. And I want to emphasize this, legally, not cheating on your taxes. So if you guys want to find out more, you guys should check out the book, Tax-Free Wealth, and I am going to give away a copy to the best comment. So please comment below. The best comment, I'm going to send you a message. I'm going to send you a copy of Tax-Free Wealth so you guys can learn about this in further detail and other tax saving strategies. And if you guys like this, if you guys got value out of this, please guys, comment, subscribe, hit the bell button so you get notifications immediately. I want to make sure that you guys are getting as much value out of this as possible. And please also share it, guys. That'd be much appreciated. Until next time, I'll see you guys later.